Good afternoon, traders. Welcome to 2023. And this is MR Strategies giving you the playbook for tomorrow, the 9th of January. Based on most my last recordings, we talked about a lot in detail was the big gap that was left underneath this market and how this market kind of forcing its way up here, in anticipation of every possible good news that could come out, and the overwhelming confidence that individual traders have had, and an enthusiasm with which they push it, and more importantly, the reality of the movement from some of these significant areas and how to understand price and on how it gets on how to take advantage of it and to maximize your profits. That being said, we talked about the multiple run-ups off of this big trend line, and this thing is going to stay in play. It's right about here. It's way up there. It's at 4,000 now. This was your anomaly run-up on, I don't recall that this is the last inflationary news we got before uh, Thursday's or Friday's news. And once again, you can just see how this just got run up. They just pull all the offers, and they just, you get these enthusiastic buyers, and they run them up to some price that's just not even possible. It's not even realistic. And yeah, obviously you saw the reaction of this. This was actually the last time I recorded. This was a massive gap higher, and this is one of those days where you just saw every possible rally and confirmation of that, because ideally we should come back down and fill the gap. It might not happen in a day, but more often than not, it does. I talk about it all the time about gap fills and how you have to pay attention to it and pay attention to all the failures at the locations to actually prove and confirm that that is the direction of where the market's going to go. So let's just kind of cut to this year, and you can see that we basically consolidated, and most of the rallies stopped up around 3,900, give or take maybe 39,2015 or so, which is actually the settlement on Friday. And you got this lows down here at 3,800, and you can see how the market really held that. And kind of surprising, because I really believed, and I pretty much am sure that in the futures there was a low of 37.60, or give or take 65, that I thought we would fill. But somewhere in one of these rollovers and in the settlement, we closed on a contract, and the premium, it was really jacked. So what really kind of happened was the cash got down to 37.65, but the futures prices didn't. And this is the premium we're kind of sitting with. So that's kind of where we're at between the cash and the futures contracts, is about 20 points. So I don't know if that's considered a gap fill or not. That doesn't matter. The point being is 3,800 is holding. So let's take a look at tomorrow's action and see how and why. I detailed this very much for you. I ran this trend line. I don't know its significance. I'm only doing it to see how it plays out on Monday. This is coming off the anomaly high right there in the 41s and change, where everybody just got caught with their pants down. And then look at that roll down. Here we are again, an enthusiastic reaction, and it's about proving it now. And we're going to see whether or not if this is realistic, and we're going to see really early in the trading session whether or not this move is going to be justified. And you're going to get some pullback, and want to pay attention to that. So the pullback area is based off this huge range, and I can only look at this is how I look at it. Is you got to look at Friday a little bit. And Friday basically was, and it's going to be in a nutshell, is this high right here is 38.75. That was the 7:30 number reaction, and you can see the immediate reaction came right back down to this 9MA or this moving average, which is going to come into play maybe tomorrow. Okay, I don't know. If there's going to be a sell-off, then that's probably the direction it's going to go and test and say, all right, this is where the market's going to have to really decide. But we're all the way up here, so you got to respect it. And 38, this is a 75 high again, and this came on play in the morning right there. We opened up right here. They jacked them up, got everybody into the rally, and then they pulled the rug. Double top, and look at that. And this is a about a 55 handle gap fill in 10 minutes. And that's just what you got to pay attention to. I talk about it all the time, and you want to take advantage of it. This is just trading that trend, and the possibility of the market filling that gap either immediately or at some point. Moving on. And then you can just see the market just completely bounced. That's 38.29. That's your low from Friday. And the rest was just a markup. And you can see they hesitated a little bit at 75 again, but they held. And they can see they never came down below that moving average, which was right down here. They couldn't get back to that. So the market was immediately telling you strength, and then it just exploded. So, in this 38, this number right here was as low as it got after we had the big markup. So the rest was marked all the way up to here. That was your highest on Friday, 39.30. This is S1. This is far. This could be a bit exaggerated. If you get it early, I would look for weakness. Absolutely. Another gap, another higher gap. Its market might be getting ahead of itself. There should be pullback. Now, I don't know if that's going to happen, once over in the overnight session, for the overnight traders, then I'd be paying attention to this area, which was settlement right in here. We're going to have to test it. They'll see if we'll test it early and whether or not it fails right in here and it comes right back down to these moving averages and that Friday low, or maybe 38.75, which was a peak high early on Friday. We don't know, but this is how I play it. It gives me an idea, especially when you get a range and the pivots are so far apart from each other. I mean, this is a support one or all the way down. Actually, it's down here. I take it back. This is support one, and that is support, and that's resistance one. I didn't even bother posting R2 and S2. S2 is actually all the way down here, 37.90. I don't know if that's coming into play, and I'm surely not sure if R2 is coming into play. That's all the way up here somewhere, I'm assuming. But this is your playbook for Monday, and once again, it's about whether the market can maintain these highs and whether or not this run up is for real. I mean, you got to pay attention and use your experience to understand what's really happening and don't get caught up in the hype. If it's legit, let them prove it, and they're going to prove it at these locations, and that's the best way to attack these markets. So that's how I'm looking for moving forward into the new year is can we maintain these levels? How much more are we going to punch through here until we roll again? Is this the next leg of the bull market? Is this a bull market? I don't know. I leave the opinions to the sidelines. It's just not important. It's just paying attention to the price at these areas and how to take advantage of the momentum turns and understanding what the institutions are doing and how to jump on board and surf that momentum. So once again, this is your playbook for next week. It's for Monday for starters, and let's see how Monday sets the tone for the next week and whether or not this January effect will be something of a run up or will we pull back down and digest again. I don't know. So this is it. Set our strategies, and if you feel like you want to reach out, get a better understanding of this analysis and how to personally attack the market in your own way, feel free to reach out, leave me an email, leave me a comment. Outside of that, trade with confidence and be patient. Take advantage of the opportunities when they present themselves. Take care, everybody.